Hello traders, welcome to Investoo.com's How to Series and this module on trending indicators. Today we're going to learn how to use the Bollinger Bands, and the Bollinger Bands are a very good tool and a very good indicator to know the market volatility. And of course, when there is volatility in the market, there is movement to one side, and hence we have a trend forming. So this indicator will show us the current trend or the immediate trend in the market. Typically, the Bollinger Bands use a 20-period moving average and a standard deviation above and below this moving average to calculate the volatility. Now, this is how the Bollinger Bands look in a chart, and here we have the Euro-US dollar 1 hour chart. The first thing we are going to learn is we're going to learn how to spot untradable markets with the Bollinger Bands. And when the Bollinger Bands narrow toward themselves, just as this in this case right here, this means that the volatility is low in the market and that we should not be trading it. Okay, now as you can see, we have the 20-period moving average right here. You can see on the parameters that we have a 20-period moving average and a 2 standard deviation on the upside and a 2 standard deviation on the downside. Okay, now the first thing we are going to learn is how to trade breakouts with the Bollinger Bands. And these breakouts are basically called the Bollinger Band squeeze. And the Bollinger Band squeeze occurs when the Bollinger Bands will turn into each other and approach to themselves, just as in this case, and then we have a breakout and volatility comes into the market, and then we have a squeeze, and right here price squeeze to the upside, as you can see in this case. Okay, so the actual setup should be when the Bollinger Bands make the squeeze and we see volatility, we should get in on the trade, and then we have like in this example, a winning trade on this Bollinger Band squeeze. We want the Bollinger Bands to narrow themselves and then to expand immediately. This is called the Bollinger Band squeeze. Because remember that when the Bollinger Bands narrow, the Bollinger Bands are telling us that price is inside of that range, okay? And the more they narrow themselves, the tighter the range is becoming. And then when they expand themselves, the Bollinger Bands is telling us that the volatility has broken up with the previous range or the previous choppy price action, and that we should be trading this side of the market. So basically, we're going to use them to trade breakouts out of consolidations, such as this period of consolidation right here, when the Bollinger Bands made their squeeze and expand immediately. We have a breakout out of this consolidation, so we need to take the trade to the upside or go long on the Euro-US dollar. Now, how are we going to take profit with this long position? Well, that's easy. Because we are trading volatility, of course, we are trading only the momentum to the upside. And in this case, well, in every case we trade breakouts with the Bollinger Band squeeze, we are going to take profit when the first or second candle close inside of the Bollinger Bands. Okay, in this case, we're going to take profit right here, and that gives us a 169 or 170 pip winner. So you can see that whenever the Bollinger Band expand after a period of consolidation, you have aggressive buyers. Well, in this case buyers, but you have aggressive momentum to the side of the expansion, and then you're going to close the trade once you have 2 candles closing inside of the Bollinger Bands. Again, we can use the Bollinger Bands to know the direction of the trend. As you can see here, after this explosion, then price started to move up, making higher highs and higher lows. And as you can see here, price respected, well, not respected, but price was testing the upside of the Bollinger Bands, okay? And it was testing the 20-period simple moving average as resistance. So by everything we have just said, price is in an up move. When price is testing the lower part of the Bollinger Bands as support and the 20-period simple moving average as resistance, we are in an immediate down move, and we should be looking to sell. And the selling opportunities come when you have well, aggressive sellers coming in at the 20-period simple moving average. But of course, you need some kind of confirmation that if this corrective move to the 20-period simple moving average has in fact ended, and we are due to a continuation of the down move in this case. And the real confirmation has to be in form of candlestick formations. You need to look for maybe a shooting star or maybe a bearish engulfing candle. Okay, if you don't know what a bearish engulfing candle or a morning or evening star are, well, you should go to our advanced technical analysis course at Investoo.com/advanced technical analysis. But as you can see here, we do have confirmation of rejection from these two candles, and then we have a move down, and we have then two candles. Well, we have also a squeeze. You can see that the bands narrow themselves and then they expand immediately. So there's a two-step on trading a corrective move. First of all, we need a corrective move to the middle of the Bollinger Bands or the 20-period simple moving average. Then we need an expansion, and then we take profit when two candles close inside of the Bollinger Bands, and in this case they close right here, and this would have given us a nice 87-88 pip win. And if you want to learn more about the Bollinger Bands or how to use them correctly inside of a trading system, you should visit Investoo.com and go through our courses. But more specifically, go to Investoo.com/advanced technical analysis.